Good morning from our global headquarters in New York. I'm Manus Cranny. You're welcome to Bloomberg Brief. Let's set your agenda. Market steady ahead of the PPI. This as the New York Fed survey flashes a drop in inflation and credit outlooks. Prepare for significant attacks. The U.S. warns as world leaders pressure Iran to refrain from striking Israel. A cozy confab. Elon Musk pitches for a rolling government to Republican nominee Donald Trump in a glitchy conversation on the social media platform X. A very good morning, cozy conversation, and maybe even a warming by the former president towards electric vehicles. NASDAQ is up 0.5%. It's a kind of situation of where do you look for risk? The headwinds from the price of crude yesterday spiking by over 4% in the United States of America, as again tensions over what is the Iranian reaction function to Israel. So that spike in oil prices was a temporary headwind to some of these equities. Nvidia, just keep an eye on a couple of different things. Russell, at the moment, you've got the Russell down over 8% for the month of August. Nvidia is up as Bank of America say, look, this is one of our top rebounds. There you go. Russell comes back to unchanged. Again, it comes down to the narrative of what do you get from the PPI today, from the CPI tomorrow, as the New York Fed say inflation expectations on the 3-year basis are trending lower, and access to credit, and this is critically important, the access to credit, that is deteriorating as well. As I mentioned, the oil prices, OPEC cut their daily demand levels yesterday, but this rally in oil prices took place with the hedge funds being the least participative in this market since 2011. In other words, the least long since 2011. So you get a rise of over 4% without the hedge funds. That is malevolent. Taking you to the bond market again, we're counting down to PPI plus 0.2%, but the bond market is the reaction function. It is the hedge it is ground zero for hedging, and that's what you saw last week in the equity market sell-off, and indeed yesterday as the Iranian tensions bubbled on the price of oil. So we'll keep that in mind. Real rates are still tight. That's UBS's view this morning as we count down to the PPI for the industry of America. Real rates are at 3%. As I say, it is a big week for economic data. Kallum Pickering, the chief economist at Peel Hunt, writes this. Central bank policy errors are the key downside risk facing major economies. While a moderation in the U.S. momentum remains our base case, the risk of a hard landing has grown. Kallum joins me now. Good to have you with us. Can you put some context around this call, Kallum? Good morning. Good to have you. This is one of your first major pieces at Peel Hunt. You are talking about the risk of a hard landing, yet I look at the Atlanta Fed GDP, I look at the other indicators which show me a robust United States of America, a strong economy. Yes, unemployment is rising ever so slightly by 0.5%, but why have you shifted to the risk of a hard landing? Good morning.
Right. Good morning, thank you. The US markets are uneasy. They've been uneasy for a while, but the US has been a great source of stability and confidence. We have been waiting for this slowdown in the US economy linked to tight Fed monetary policy. As you mentioned, the Atlanta Fed for Q3 still looks pretty strong, actually well above the FOMC's estimate of US potential growth. So we have this puzzle where we expect things to slow, and yet the data keep telling us actually not quite so fast. My worry here is the US is a highly cyclical economy. Confidence can matter a lot. We've had the tightening of financial conditions in markets as a result of the equity sell-off. And so I wonder if after this 2-year period of the US growing above its potential rate, things just moderate as a normal course of a cyclical slowdown. And then the question is, how much does it slow? Does it slow enough for the Fed to say, we can forget about inflation for a while, we can cut rates and support risk-taking? Or is it not quite slowing enough for the Fed to be eager with its monetary easing? That probably is the worst scenario for markets, and that's where that hard landing risk starts to increase.
Now, look, you make it very, very clear that you are a buyer of the Psalm rule. In other words, that propulsion higher in unemployment. You're also a proponent of observing the inverted yield curve, which disinverted ever so slightly last week. That then takes me to, we've got 3 meetings. We're pricing in 100 basis points of cut. That suggests to me a 50 basis point cut at one of them. And many people are saying, look, that's way too much. Torsten Slok is saying, again, the market is mispriced in terms of rate cuts. You're not going to get that 100 basis points of cuts before Christmas. Given the various pillars that you look at, do you think 100 is fair?
No, I think 25, 25, and 25 sounds reasonable. I thought actually the Fed may do what the Bank of England and the ECB are likely to do, which is cut and then skip, cut and then skip. But probably the balance of risk now favors just a continuous 25 basis point shift down, at least at the next three meetings, and then probably heading into next year. What makes me nervous, as you mentioned, are the two indicators, the yield curve inversion, the SARM rule. These historically are much better than economists at predicting US downturns. Now, we don't need to do big intellectual backflips to try and explain these away. There's lots of weird stuff going on in money markets as we adjust to a more normal, I would say emphasize more normal inflation and rate environment. And so it's possible that actually the short end and the long end just don't agree on what the underlying balance of inflation risk is in the US. Okay, we put that to one side. When it comes to the SARM rule, in a more inflationary environment, you might say actually the natural rate of unemployment just should be a little bit higher to balance demand and supply. And so you can make this case. That said, economies head into recession. They often head into recession after central banks have increased interest rates, and the US market is often quite sensitive to fluctuations in global risk markets. And so we have a series now of indicators which say probably things won't go very bad, but we have to at least watch out for the slowdown and then judge as the incoming data faces whether or not that is sufficient for the Fed to go aggressive, or whether the Fed is actually the balance of risk still favors us worrying a bit here about inflation.
Well, let's just take a quick break from the US and talk about Europe and Germany. We just had a little bit of breaking news, Kallum, from the ZEW. Let me just tell our viewers what that is. This is the sentiment indicator. It falls to 19.2 from 34. So this is the investor expectations certainly taking a significant thump. When it comes to current conditions, that goes deeper into the red than whence we've been. So expectations 17.9 for August. I mean, that's for the whole of Europe. But on Germany, again, Germany, the accusation is the sick man of Europe, even relative to France on the growth trajectory. Again, this goes back to policy and policy error. The accusation would be that the Fed is already in active policy error mode and really has to try and dig itself out. If I look at the pricing for Europe, it's 65 basis points of additional cuts between now and the end of the year. When the ECB see this kind of data from Germany, a slowing China, the consequence of that is bearing on Germany. Does that suggest that the pricing for the ECB is fair value?
Well, if I were at the ECB, I would be looking to turn monetary policy actively easy in order to support demand in core Europe. Germany is more exposed than any other major economy to the global shifts in supply chains and to the risks associated with trade wars. And that is now hurting confidence. And so there's a chronic loss of confidence in the German economy. You should hope that consumers can do a little bit more, so rate cuts can help. For the US, the data is still telling us that the US economy is strong, so the Fed should be taking monetary policy from tight to neutral. But when we ask this question, has the Fed made a policy error, the focus is on whether or not they should have cut at the last meeting in late July. That's wrong. If the Fed has made a policy error, it happened in January. It happened at the start of the year because of the monetary policy lags. My hunch here is that in Germany, we're going to have to wait until the next election for the fiscal rules to get changed before you see any significant improvement in momentum. Whereas in the US, actually, the downside risks can probably be contained with rate cuts and probably something on the fiscal side after the election. And so even if it's softer near term in both economies, I'd still be betting on the US to do quite well into next year, whereas I'd still be hesitant in Germany.
I like the subtle differentiation, you know, actively easy in Europe. You say tight to neutral in the United States. Very briefly, in 15 seconds, your view on neutral in the United States of America?
Probably 3.5% to 4%. It's well above the Fed's estimate of 2.8%.
OK, well, that's going to be a little bit more contrarian with some of the other panicked people out there. Kallum, thank you very much. Kallum Pickering. Good to see you at Peel Hunt. Good to have their first edition of your Global Outlook on Bloomberg Brief. The top stories trending on your Bloomberg terminal this morning. GM are laying off staff in China and will soon meet with a local partner to plan a larger structural overhaul of its operations there. The job cuts come as recognition that the Detroit automaker is unlikely to see its sales return to 2017 peak levels. The UK is reviewing the time it releases key economic statistics. The review comes after concerns from market participants that the earlier 7 a.m. release is helping spur volatility in interest rate and bond markets and hindering liquidity. Shares of COVID test kit and drug makers are in the spotlight in Asia after posting strong gains in the days of recovery amid a surge in cases. High temperatures and the Paris Olympics led to more indoor gatherings, which in turn has led to a spike in COVID cases in China, Japan and South Korea. Coming up, Elon Musk had his own interview with Donald Trump. The Tesla CEO pitched himself for a potential role in the Republican White House. And later in the hour, we catch up with Jeffrey Kleintop of Charles Schwab on whether the unwind in the carry trade really is over and done with. Context matters on Bloomberg.
I think it would be great to just have a government efficiency commission that takes a look at these things and just ensures that the taxpayer money, the taxpayers' hard-earned money, is spent in a good way. And I'd be happy to help out on such a commission.
I'd love it
if it were formed.
Well, you're the greatest cutter.
You're the greatest cutter. It was a mutual admiration society. Elon Musk interviewed by Donald Trump last night. Joining us now to break down the conversation, it is our senior editor for Bloomberg, Bill Ferries. Bill, good to have you with me. Well, you just heard Musk speaking there about pitching himself for a possible role. It's a bit like The Apprentice, isn't it? For a possible role in the Trump administration. I'd be happy to help out in such a commission. I'd love if it were formed. Of course, this was something for both parties, a presence on X, and for Donald Trump and Elon Musk, I suppose, to sort of chew the fat.
Oh, absolutely. I mean, both men had a lot at stake here. For Donald Trump, he's gone through a very bad 3 or 4 weeks of the news cycle with Kamala Harris's entry into the race and the amount of money she's been raising. He's looking to kind of change the narrative, getting back on X, and then also just frankly reaching a lot of his core supporters who are not necessarily members of his Truth Social network, which just doesn't have the numbers that X has. So he's getting back in touch with some of those people. And Elon Musk as well, making a pitch for the relevancy of X, pitching himself for this job on a commission. He raised that 2 or 3 times in their discussion, how he thinks it would be a good idea to have this come into place. And he actually also made a pitch for his Tesla EV vehicles to presumably a Republican or more conservative-leaning crowd that doesn't normally think of themselves as buying electric vehicles. So both of them had a lot at stake. It was 2 hours of back and forth after about 30 minutes or more of technical glitches that kind of slowed things down at the start.
Yeah, I think it's interesting that the European Union actually sent a message to Elon Musk before this event even took place, which has irked Elon Musk, to say the very least, in terms of his response mechanism and putting out a tweet on that. Look, if we talk about Musk supporting Donald Trump, we know that, we've seen that. At the same time, the UK Prime Minister Keir Starmer and, as I say, Thierry Breton posting this letter. I mean, you know, I looked at some of the tweets from Elon Musk. Some of them we can't actually retweet here for various reasons. I think this goes much more to the sensibilities of what free speech is in the United States of America, to how the Europeans look at communication online.
Yeah, certainly. I mean, I think Musk has a very absolutist view of this, of free speech and what it means. And I think there's a little more nuance in the Digital Services Act, for instance, you know, the way it looks at harmful content and inciting violent behavior and things like that, that are not quite as well perhaps defined in U.S. law. So that's really where this conflict comes. But you do see Musk continually tweeting at European leaders, but Starmer in particular, over his response to the arrest following the stabbings of those girls. just at the very end of July. It's not going to let up. The challenge when you're dealing with someone like Musk is it's his platform,
Yeah.
and he does have this microphone that he'll continue to use unless there's some real disincentives to using it.
Look, absolutely, and I think part of the phraseology that Musk used was, in response to this, it was the enemy of free speech in response to Breton's letter, along with a number of other posts. Bill, thank you very much. Great to have you with us. He sat through the whole conversation. Let's pivot to the Middle East. The United States is warning that an Iranian attack against Israel has grown ever more likely. Here's our White House spokesperson, John Kirby, briefing reporters.
We share the same concerns and expectations that our Israeli counterparts have with respect to potential timing here. Could be this week. We're continuing to watch it very, very closely. We have to be prepared for what could be a significant set of attacks.
Of course, it is the White House spokesman, not our spokesperson. Now, the US and the UK, France and Germany and Italy, all urging Iran to refrain from attacking Israel. The leaders of those nations issued a joint statement writing this: "We called on Iran to stand down its ongoing threats of military attack against Israel and discuss the serious consequences for regional security, such as an attack take place." Joining me now is Dan Williams in Jerusalem. Dan, the preparations, you're on heightened alert in Israel for a potential attack. And the assumption, the sort of working assumption is this could be multi-pronged from multi-proxies towards Israel.
Indeed, and there's quite a bit of game theory going around, not just in the media, among commentators, among regular people, presumably among decision makers in Israel, in Iran, in Lebanon, among Hezbollah leaders, Hezbollah being the Iranian proxy there, which has also vowed major reprisals against Israel. The question is, could those reprisals be kept as a one-off without inviting from Israel retaliation for the reprisals, retaliation for the retaliation that might drag the region into an unprecedented escalation of what is already a multi-front war? And presumably that is what the Americans and other Western powers are looking to tamp down now. They're hoping that a resumption of Gaza truce talks on Thursday might indirectly contribute to calming those other fronts, because those proxies, Hezbollah, the Houthis, Iran itself, have actually openly called for Israel to enter a Gaza truce. Presumably that would be a way for them to lay down their own arms for now as well.
Well, a great deal has been made out of Keir Starmer directly spending time on the phone with the new president of Iran, refrain from attacking Israel, and various news sources saying it was a rare telephone call of up to 30 minutes. On Thursday, the Gaza truce talks are due to resume. Blinken is returning to the region, I understand, in the next 24 hours, doing a multi-country trip. Is there optimism?
Guarded optimism. It's worth noting that Hamas, which is obviously a significant partner to any Gaza truce, it's one of the warring parties, has said it is not interested in this round of talks. It has called on the mediators to compel Israel to accept what has previously been agreed. I would say it stops short of openly boycotting these talks. We understand the talks will take place in Qatar, which is a mediator country that also plays host to a Hamas office. So I think it's a worthwhile assumption that while the mood music may be discouraging for Hamas right now, they will wait and see what emerges from this round of talks. As far as the Israelis are concerned, this is a round of talks to discuss where things stand, to see whether Hamas will relent on some key points that have held up a deal so far, and thereafter Hamas will be briefed by the Qataris, by Egypt, which is another regional power that has been mediating between the sides. And of course, the United States is also involved.
Well, there's certainly more deployment, isn't there, from the USS Georgia in the region to the US Abraham Lincoln. So there is an upscaling of deployment to the region. Dan, thank you very much. Dan Williams in Jerusalem. This is Bloomberg. get you up to speed with some of the front page news from around the world. This is what we're tracking. First up, the Financial Times. The Russian Navy is trained to target sites inside Europe with nuclear-capable missiles. Maps of targets as far west on the coast of France and the UK are detailed in a presentation for officers that predates the full-scale invasion of Ukraine. Ukraine has in recent days sent troops across the border into Russia. Up next, Washington Post, they lead with the FBI probing alleged Iran hack attempts targeting Trump and Biden camps. Suspected attempts on the Trump associate and advisors of Biden-Harris campaign. Investigation began in June. So far, no confirmation that any hacks were successful. And finally, Bloomberg leads with this story on China. Going to the extreme in a crackdown on the bond market frenzy, Chinese authorities are tightening their grip on the world's third largest bond market. Regulators told rural banks to renege on their market obligations. Highly unusual move. The PPI, we're counting down to it. We'll catch up with Charles Schwab on what they think of volatility in markets. From our global headquarters in New York, welcome to Bloomberg Brief. I'm Menace Cranny. Let's set your agenda. Markets steady ahead of PPI as the New York Fed survey flashes a drop in inflation and credit outlooks. Prepare for significant attacks. The U.S. warns as world leaders pressure Iran to refrain from striking Israel. A cozy confab. Elon Musk pitches a role in government to the Republican nominee, Donald Trump, in a glitchy conversation on the social media platform X. Good morning to you. The headwinds were obvious yesterday in the price of oil as it pitched higher. It's giving some back this morning, but it is a new week with new headwinds and new unknowns in the form of political risk. Equities are desperately trying to stabilize themselves. UBS say take stock. Take stock of the scale of the momentum that you had to the upside. Goldman Sachs have a lovely line from Scott Rubner's team. There's a brief window to buy stocks. Tactically bullish. We'll go tactically bullish on the 30th of August. Now, there's a couple of other things to keep an eye on. The Russell 2000 at the bottom of your screen is down 1/8 of 1% this morning. I want to give you some context of real concern about the real economy. The Russell 2000 is down 8.5% in August, and we are only 10 days into this month, 13 days into this month, I should say. Nvidia is also one to keep an eye on. Bank of America yesterday pivoted to the top rebound pick for them within the chip stock, and the stock was up over 4% yesterday. It's up another 1.7% this morning. I think the context from Goldman Sachs is excellent. There's a window for you to jump through to buy these stocks. When it comes to the oil market, we ramped by over 4% yesterday, again, on the concern about what will happen between Iran and Israel. What is interesting is oil gives ever such a small amount back this morning. This is a ramp higher on the lowest participation by the hedge fund since 2011. And bonds, they are your hedge. There's no doubt about it. Last week when the equity market sold off, they were your hedge. And on this war escalation risk between Iran and Israel, the conflict between the two of them, that risk provokes a move into bonds. Well, to the Middle East, Israel is bracing for a potential strike by Iran as the U.S. warns of an attack has grown ever more likely. Here's the White House spokesperson, John Kirby, briefing reporters.
We share the same concerns and expectations that our Israeli counterparts have with respect to potential timing here. Could be this week. We're continuing to watch it very, very closely. We have to be prepared for what could be a significant set of attacks.
Well, the US, the UK, France, Germany and Italy all urging Iran to refrain from attacking Israel. The leaders of those nations issuing a joint statement writing, "We called on Iran to stand down its ongoing threats of a military attack against Israel and discuss the serious consequences for regional security should such an attack take place." Sylvia Westall is with me. Sylvia, thank you for joining us. I think it's interesting that you get this coalescing by world leaders from Germany, the US and the UK directly communicating with Iran on this. What is the current thinking on the scale of retaliatory action that Iran will take? How do they thread this needle without full escalation to war?
Yeah, that's the real, dilemma for Iran right now. Obviously, there is a real pressure for them to act after the killing of the Hamas leader in Tehran. Iran needs to show its population. It needs to show regionally that it can retaliate to this, but it needs to do so in a way that would prevent a really big counter-reaction from Israel. And obviously, you've got all these countries showing that they stand behind Israel, that they're united in wanting the situation to calm. There's a real concern that as things continue to inch and escalate, that there could be a wider regional war, which would obviously have wider implications for the region, for Europe, for the US, for assets, for commodities. So it's a really sort of tense moment. There is sort of a line of thinking in Israel that Iran actually doesn't really want to retaliate in any significant way, and that it can actually benefit from the uncertainty over what might happen. We've already seen that some of the implications of this were underscored by Fitch. They had a ratings decision. They downgraded Israel's sovereign debt by one notch overnight from A to A plus, from A plus. And there are ways in which these ongoing tensions are affecting people in Israel and the wider region, and really putting Iran on top of the agenda once more, despite there actually having been no reaction yet.
I mean, if you look at the scaling up, the scale of deployment, the USS Georgia, that's a submarine equipped with 150 Tomahawk missiles, the F-35s on the US Abraham Lincoln aircraft carriers. So the scaling up is preparing for quite an escalation. Look, Sylvia, you know better than most. The reaction function is not just from Iran, but it is also via those proxies, whether it's Hezbollah, whether it's any of the others. There is a growing thought process that this will be a multi-front reaction from Iran and its proxies. Where should we be most concerned about? Should it be the Hezbollah reaction, which is perhaps better equipped relative to the Houthi? We know that the general approach of the Houthi attacks. So what is the region preparing for?
Sure, and I think you make a really good point, Manus, in that what Iran terms its axis of resistance has been much more coordinated and unified since these hostilities erupted. And I think there are two things. One would be that for Israel, it sees the biggest threat from Hezbollah over the border with Lebanon. Hezbollah is the sort of the strongest force, the most organized, and the force able to do the most damage. But perhaps the kind of more frightening scenario for Israel and for its allies is actually this idea of coordinated attacks, not just from Hezbollah, but also from proxy groups operating from Iraq, from Syria. You've got other ways in which this retaliation could happen. You've got these shipping attacks that have been happening via the Houthis in the Red Sea. So, if it is a set of attacks that seeks to overwhelm and distract at the same time, that's something that obviously the US and Israel are looking for, and why you have this real show of force in the region to show that, if that happens, then there is deterrence and there is the ability to also strike back.
We obviously have these lead stories that you've got the leadership of the United States, France, Germany and Italy coming together. Keir Starmer in the United Kingdom spending time speaking to the new president, refrain from attacking Israel. I just wonder, from the perspective, from the geography within which you sit, the Middle East's reaction function. This is the West's reaction function. What is the impact of uncertainty in the region there from Saudi, from the UAE, and from those protagonists who have a real vested interest on non-escalation here?
Absolutely. I mean, underscoring that, Axios reported overnight that US Secretary of State Antony Blinken is scheduled to travel to the Middle East, kind of underlining the importance of these regional countries. He's apparently going to travel to Qatar, Egypt and Israel. Qatar is one that's extremely important to watch, given its important role as a go-between between Israel and Iran. And you've got these talks on a potential Gaza ceasefire, obviously, seen as a long way off, but, they're being hosted by Qatar, those happening towards the end of the week. And that's another reason why in Israel and the US, there is this belief that potentially something could happen before that, so that Iran can essentially have more negotiating power heading into those talks.
Sylvia, thank you very much. Sylvia Westall there with the very latest on the Middle East. Let's turn our attention back to the markets. The drumbeat to PPI is being heard around the markets, and we're going to get a read on the retail sector. We've got Home Depot reporting their numbers. That'll hit before the bell. Comparable sales are expected to decline as shoppers feel the pinch and the pressure from inflation. Our consumer reporter, Dasha Afanasieva, joins me now. Dasha, good to have you with me. I mean, when I look at Home Depot, you've got the retail average consumer like me popping in there. Then you've got the builders in there that are actually really sort of buying for refurb. So just dissect what we can expect from Home Depot. It's been a tough time for them in the past number of quarters, hasn't it?
It has, and we're expecting a seventh consecutive decline in comparable sales, a decline of 2.4%, in fact. And that's driven by high interest rates. People aren't wanting to finance big bathroom renovations, big kitchen renovations. You've got economic uncertainty, a housing market slump. So it's all this perfect cocktail. And on the back of that, there's also this longer-term decline from the time of the pandemic, when people were spending a lot on goods and a lot on renovations. 2021 being the peak, and there's been this steady decline since. So that's also an effect that Home Depot has been hit by.
I'm just looking at the analysts. They still got 26 buys, 13 holds, and an average price target still 10%, 9.3% above here. The question, I suppose, would be if they're hit with another tough quarter, Dasha, what's this going to say about the capacity to price? I mean, we haven't seen price cuts and real incentives to get into the shops or into these refurb stores for a long time. So what is the company doing to push back against the slump?
So I don't think that you can really blame the slump on the company or on the CEO, Ted Decker, but they are trying to pivot and do something about it. Interestingly, in a bid to kind of cash in on a lack of housing market availability, housing market affordability, and the fact that the housing market's so strained, they're actually now selling prefab houses for $63,000 a pop to try and cash in on that. And more broadly, it's also trying to compete better in that space, in the professional space, by buying SRS Distribution, which makes roofing supplies for $18 billion. So they are trying to pivot. And in terms of pricing, yes, there's across the consumer sector, there's a highly promotional environment, and I'm sure that's affecting them as well. But of course, they've also got their targets on profitability. And just a reminder, for the year, they are expecting like-for-like sales decline of 1%. But unfortunately, the market's actually expecting a lower decline. So I think we'll be looking for signs of how the company plans to get those two aligned, whether it's by being a bit more pessimistic or trying to convince the market that it can make it a 1% decline rather than a 2% decline. I got you.
Well, all eyes down whether it is the seventh consecutive decline and what they're doing around it. Dasha, thank you very much for setting us up for the trading day. Dasha Afanasieva there on Home Depot. Well, Elon Musk pitched himself for a new role, cutting the US federal spending if there is a second Donald Trump administration. The billionaire Tesla boss spoke to the Republican presidential nominee. It was a 2-hour conversation on the platform X.
I think it would be great to just have a government efficiency commission that takes a look at these things and just ensures that the taxpayer money, the taxpayers' hard-earned money, is spent in a good way. And I'd be happy to help out on such a commission.
I'd love it
if it were formed.
Well, you're the greatest cutter.
There you go. Derek Wallbank is with me. Derek, just the end of that piece, you're the greatest cutter. I mean, this was 1.3 million of an audience. What do you think Donald Trump got from it politically? Let's start there.
Well, look, I think anytime that you have an audience with the richest guy who's endorsed you on his own social media platform, you know, that's sort of setting the stage for where we are, right? You know, Elon Musk is the richest guy in the world, and he has been a big Donald Trump supporter. He has used all of his influence to try and butter up Trump and to swing Harris down a little bit. And it's really clear which way Musk is going. And so Trump sat down with him. They had a conversation amongst friends. It was very amiable. They They agreed on an awful lot. It was interesting. There were some places where they didn't quite necessarily see eye to eye. Musk was pressing Trump towards more sustainability, trying to get him, more toward nuclear power. Both things that I'm not sure that Trump was all the way there for. But it was an interesting sort of conversation. I do think that the thing that you highlighted at the top of this was something that came out of that, this discussion about a fiscal improvement sort of commission kind of thing, and could Musk be involved in that? I think that's really interesting because, look, Menace, I'm old enough to remember something called Simpson-Bowles, which was a similar commission designed to try and cut government spending. I'll give you one clue as to how that worked out, and that's that it didn't. The thing went through the federal budget, tried to figure out places to cut, how to raise revenue, all this other stuff, came up for a final vote, and it got absolutely waxed by Congress. Nobody wanted to stand by its proposals at all because cutting in theory is easy, cutting in practice, very, very hard.
Very, very different when it comes to government. And it's interesting, of course, Musk was on the advisory council when Trump was in power before, and then he withdrew because he stepped off because of the withdrawal from the Paris Climate Agreement. And look, we've also seen Donald Trump at the same time being I suppose, if you look at the response mechanism from Europe and from the UK Prime Minister, the EU sent a letter. This is Thierry Breton, the EU Commissioner for Internal Market, about content that promotes hatred, disorder, incitement, violence, in certain instances of disinformation. Again, warning Musk before this event about how he should proceed. And it certainly irked Musk quite a bit.
Yeah, it really did. I don't think that his response is fully quotable in this context, but it went something like, if I were to paraphrase, I would say, I disagree with you, might be Elon Musk's response, but slightly more strenuous. I mean, my social media feeds among Republican activists have been filled with, from both this and from some of the context that he got back from the United Kingdom and criticism there, with things like the answer to all of this is 1776. The United States has a First Amendment, and, that's that, which is, it's one of those things, Manus, we talk about this a lot. If you're operating in a lot of different places, you have to take into account the geopolitical risk that comes there with. You do have a First Amendment. Yeah. You have a very large line between what you say and how far you can say it in the United States. Doesn't extend that far in other marketplaces, as Elon Musk knows well. And so there is a geopolitical risk aspect to this. On the flip side of that, though, I also think that it's important to note that this sort of thing is the kind of thing that irks Republicans particularly. And so if Donald Trump were to win, it might be something he'd take up.
Look, 100%. I think it's also a huge cultural difference as well. Derek, thank you very much. Derek Wallbank there, setting the stage of the Trump-Musk discussion. Stocks are higher this morning from a beautiful New York. It is Bloomberg Brief. I'm Menace Cranny in New York. Jeffrey Kleintop of Charles Schwab, I should say, writes the following. Stock markets less exposed to tech, the dollar and yen, along with those that have stable economic backdrops, below average valuations, seem to be most likely to be better able to withstand any further unwinding of the yen carry trade. Jeffrey joins me now. Look, a great deal has been written and much hand-wringing has been done about the unwinding of the carry trade. But from what you've just presented to me there, it sounds as if you want to take slightly more global positions outside the United States to perhaps balance and diversify the portfolios, if they are less exposed to tech, less exposed to the dollar, and less exposed to the yen.
It makes sense to me that a lot of this carry trade for more than a decade has come, of course, out of the yen, borrowing in yen, and into U.S. tech. We've seen these flows for many, many years now, and I think there's a bit more to go because I believe that there's still a medium-term and a longer-term unwinding of the carry trade to go. Borrowing in yen, not merely short yen contracts, but actually borrowing in yen from Japanese banks, and then, of course, the net investment position of Japanese investors outside of Japan suggests to me there's more to go out of U.S. tech. And so what I found was, if you take a look at the allocation of markets outside the U.S., where there's less tech exposure, and again, more of a stable economic backdrop, which is important because some of this was catalyzed by the weakening U.S. labor market, I think you find more attractive markets in Europe, where markets actually have outperformed here in August. European markets have still down, but faring better than U.S. and certainly a lot better than the U.S. tech sector.
Yeah, I mean, we've just had that ZEW from Germany, which looks a little bit under pressure. And you're right, that correlation between the NASDAQ and yen is almost in lockstep. Can we just discuss the medium and longer term implications? Because I think the nuance that you bring to bear is very important. There's the correlation between the NASDAQ, the 14-week correlation turning positive between the two. But you talk about the lending that's gone on in yen. You talk about the impact in terms of the ownership of the bond market here in the United States of America, the ownership of equity markets here in the United States of America. So your base case, Jeff, is that there are ripple effects that are yet to be felt. We've talked a lot about the spot unwind in the carry trade, but there are further reverberations that you focus on.
That's right. So in the futures market, you suddenly get a margin call and you need to immediately close out those positions when they move against you. But there are other aspects of the carry trade that may yet unwind. A proxy for the medium-term carry trade magnitude is looking at Japanese banks' foreign lending in yen. This type of lending is often to non-banks like asset managers, and it's been on the rise really since 2010. It's accelerated in the last couple of years as rates in Japan remained very low while they started to rise everywhere else thanks to the central bank actions. So according to data from the Bank of International Settlements, the loans totaled $1 trillion, or 145 trillion yen, as of March 2024. Now, it doesn't mean all of those loans might get closed out, but they certainly moved aggressively against those asset managers. And I think they may look to reduce those carry trades and pay back those loans over the medium term. And that's going to remain, I think, an overhang against those assets that they purchased, including perhaps U.S. Treasuries. We know there's $1 trillion in U.S. Treasuries from this carry trade, but there's also a lot in equities as well, and that gets to the longer term aspects. Japan's long-term net investment position is positive. Japanese investors are the biggest non-U.S. investors in U.S. Treasuries and among the top 5 in ownership of non-Japanese stocks. And so as maybe they begin to bring capital back home again, repatriate that could lead to a sell-off, not just in treasuries, but in equities as well. That could overhang for maybe several quarters ahead of us here. So I think there are still more ripple effects, as you said, that are yet to come.
Which then makes the decision process about whether you re-enter. I mean, there's a certain amount of stability in these markets, has re-established itself Monday and Tuesday relative to where we were last week. But I was looking at some of the positioning reports. Deutsche Bank have this. Investors slashed their equity exposure by the most since COVID. And the positioning is underweight after, obviously, those peaks that we saw in July. So it seems as if there's been a wholesale retreat from these markets. I mean, are you tempted? Do you see opportunity in this underweight positioning as something that will put a floor in this market?
I think there's a possibility that there's probably no more net selling of equities, but I think there could be more of a rotation out of technology into those areas that have lagged in recent years, like, for example, financials, a rather unloved and lower valuation sector, but one where we could see more opportunity as the yield curves around the world begin to steepen up. We know that's traditionally good for the banking sector. We could see more opportunity there. And as I mentioned, European equities, which are trading below their longer-term price to earnings ratios, versus those in the U.S., which are quite expensive. So I think maybe a rotation within equities more so than a wholesale selling.
Look, what we had last week was a growth scare. Fed misstep, Fed policy error, as you say. We can debate either they're in it or they've been in it for months. Leave that aside. Last week, and even this morning, the German data says to me that we are incrementally moving towards a narrative which is slowdown. It's a question of the scale of the slowdown. So in a slowdown position, where do you want to be most exposed? Briefly.
Well, I think in those markets that are priced for a slowdown, and again, those below average valuations in Europe, I think are more favorable. The economies they're certainly growing slower than average there as well, but I think there's maybe less momentum on the downside given the embedded pessimism, I think, within those valuations. So I think those are more on a relative basis, more attractive markets.
Jeff, thank you very much. Good to see you on the show. Jeff Kleintop, there of Schwab. Quick snapshot of markets. As Jeff was just saying, this is about the debate that you're going to have, whether you want to diversify out of U.S. equities. Of course, that brings into the question of U.S. exceptionalism. You know, the Atlanta Fed is still indicating 2.9% growth. Dallas Fed, 2.2% growth. So you are looking at a reasonably robust outlook for the economy. Bear in mind, as you go into PPI today, the New York Fed, medium-term inflation expectations are declining. This is on the 3-year outlook. And also the perceptions of credit access have deteriorated. That's just something to bear in mind as you count down to the PPI. NASDAQ futures up 0.6%. NVIDIA was one of the stocks that flew higher yesterday, up by over 4%, as Bank of America said, look, this is our rebound choice stock in the chip sector. Here's what's on the slate today. We're chatting about Home Depot. They will be up before the bell. As I said, PPI hits the tape at 8:30 a.m. That really gives us the roll call into CPI tomorrow. Fed speak, you've got the Atlanta Fed President, Raphael Bostic. That is at 1:15 p.m. The surveillance team are up next. Danny will be there around the desk with Lisa and Anne-Marie. That's it from Brief. We'll see you tomorrow morning.